Welcome back to Classic Business. My name is Kirby Lachranji, and I'm standing in for Michael Avery this evening. Public Enterprises Committee, tasked with the inquiry into the mismanagement in state-owned enterprises, heard evidence from Minister of Home Affairs, Minister Malusi Gigaba, today. This panel follows on from a report issued by Futuregrowth recently, which provided details into its investigation of governance at 6 key SOEs. President Cyril Ramaphosa and newly elected Public Enterprises Minister Pravin Gordhan appear to have their work cut out for them, as government departments and state-owned entities continue to break rules to get around budget restrictions. According to a report by the City Press 2 weeks ago, in the past 3 months, Treasury was forced to block state-owned entities and government departments from blowing 15 billion rand on irregular purchases. These include requests from state companies such as South African Airways, Armscor, the South African Post Office, the SABC Eskom, and the Environmental Affairs Department. Joining me now is Olga Constantatos. She's a credit and equity process manager at Futuregrowth. Olga, in the spotlight this evening is really the report that you've been part of, which is called SOE Governance Unmasked, a learning journey. It's 47 pages of your experience at Futuregrowth, or I shall rather say Futuregrowth's experience, of which you obviously have been part of. Tell us a little bit about SOE Governance Unmasked, and just tell us a little bit about the report at a very, very high level.
Yes, hi Corby, and thank you for having me on the show, and good evening to all your listeners. Yes, I mean, a journey I think is the right way to describe this. It's been 18 months of analysis by a team of probably between 9 and 10 analysts. We've been looking at governance at those 6 named SOEs and at some of the others as well. And I think what we really tried to look at was making governance real. So, a lot of people can think of governance that it's the board of directors and it's all the things they do. But I think what we discovered is that governance doesn't begin and end with the board of directors. And it's certainly not just a bunch of policies that, are written up, look all very neat and impressive, and are kind of stuck in a bottom drawer and nothing further is done with them. What we discovered is that the who and the how is particularly important about governance. Who's making decisions, how those decisions are being made, what disclosure, reporting, and various levels of transparency are around those decisions, and how are exceptions to rules, how are those reported, and how is the whole decision-making process at the entity, how is it set up, and how is it actually carried out, and crucially by whom. So it really was a journey of 18 months by a big team of, here at Futuregrowth.
So I suppose you've introed it very well there, saying that really it goes about the governance improvement categories, the who matters, which is who makes decisions.
Yes.
The focus on the board of directors and the board committees, and ensuring that those are above board. The internal watchdogs, ensuring that there's a scrutiny and oversight as to the decisions that get made, and then obviously providing transparency and reporting. Where do you think SOEs have failed the most? Do you think they failed in all those categories?
Mixed bag, and I think it would be unfair to lump them all together. I think that there are some SOEs that have got better practices and processes that are probably more strictly adhered to than others, and I think there are others where there has been and it's well publicised, quite considerable slippage in that. And I think from an outsider's point of view, because that's all we really are at the end of the day. We manage people's pension funds, and we make investments into these SOEs for which we need a return, and we don't have a big line of sight or any clarity really as to what's going on in these entities. And so I think the who and the how is very, very important, and the crucial difference I guess with SOEs is that they're not public companies in that they have a wide body of shareholders. They are governed by the rules of the market, so if you do things badly, you'll go out of business, or you'll be severely impacted, as we've seen, with Tiger, with Steinhoff, with, all those various companies. And so SOEs have a slightly different nuance in that they're funded through taxpayers' money, and so, there isn't that same kind of market discipline, I guess, at the SOEs. And so it becomes even more important at the SOEs for the governance practices to be scrutinized, because there can be there can be people appointed for reasons other than to act in the best interests of the company, and I guess that's what one has to watch for.
Okay, in this case, government is the shareholder, so it doesn't have the oversight of individual shareholders looking in at a board of directors and can hold them up to scrutiny. Do you think that, firstly, that there's the requisite skill inside government to ensure that they hold these boards to account, number one, and number two, do they have the time to do this kind of thing?
Yeah, look, I mean, I think, what we had to do, we had to look upwards. We had to look and see how are the boards, for instance, appointed and who has that power to appoint them. And in most cases, it is the shareholder ministry. So each shareholder or each SOE may have a different shareholder. So it might be DPE in some instances, like in Eskom and Transnet. It might be economic development for IDC. It might be treasury for Land Bank and for DBSA. And so, there's differences there. So even if we look, like, let's take the example of the DBSA board. That's appointed by the Minister of Finance. It's got 14 board members. Most of them are non-executive independents, 12 of them, in fact, 12 out of the 14. And yet, some of their decision-making practices, leave a little bit of room for improvement. So their quorum requirements are set very low. Only 5 members are required of the board to make a decision, and they make decisions by majority, and so only 3 effectively members out of a 14-member board could pass a decision. And so I don't know if it's a skill thing. I think it's just nobody's ever really looked at this before in this way and looked to see, where these breakdowns could happen and where decisions could be made that were maybe not necessarily in the best interest of the company. I think crucially as well, particularly with procurement, a lot of these entities do large-scale, big-budget procurement, often in Forex. There's often a big, rand-dollar element. There's a hedging element. And so people on those procurement committees need to have the requisite financial skills. And certainly that wasn't always the case that we saw. Another example is Sanwell. They, on their audit and risk committee, firstly, it was very small. There's only 3 or 4 members on it, which we don't think is enough. And secondly, for audit and risk, you need somebody with quite a deep level of financial skills, and there was nobody who had that, on that committee. So it's not clear and I guess this is the big question for us, is in making these appointments, what is the shareholder considering? What questions are they asking of what are the requisite skills that are needed? Who's got the right experience? Where are the conflicts? In terms of people's other responsibilities, other boards, etc. And so those questions, it's just there's no clarity around the process to appoint a board. And so, one doesn't know from the outside why certain people are there.
Maybe a loaded question, but let's assume government and SOEs in this case, so let's not worry too much about government, but SOEs, if they held themselves up to international scrutiny and potentially even just implemented best practice globally, we wouldn't be in this situation. We wouldn't be having this conversation this evening regarding the issues at SOEs, surely.
I think that's absolutely right. A lot of them prescribe or say they prescribe to the King Code. You can read in the integrated annual reports. They'll very proudly say, we prescribe to the King Code and all the things around it. But when you look a little bit closer and you kind of scratch on the surface, there is evidence of really an utter disregard, frankly, for the King Code. And sometimes that's at the company level, and sometimes that's at the shareholder level. Basic adherence to the law sometimes can be an issue. We've seen it with requirements. Each state-owned entity is required to comply with the PFMA, the Public Finance Management Act, and that is a very clear act that sets out very clearly how public finances are meant to be spent. And there have been very clear transgressions of it. You've seen it in Eskom qualified audit report. You've seen it with Ongeni, when the minister unilaterally just decided from one day to the next to fire the entire board, basically breaching the PFMA, breaching her very own Water Act, for the previous water minister. And so, basic adherence to the law is sometimes not adhered to, and so never mind, the Companies Act, not the Companies Act, well, the Companies Act too, but also the King Code, and these are all voluntary things that each entity says that they comply with, but actually when you look at the detail, you see some very mixed levels of compliance.
Yeah, and I suppose this is the role that I suppose that you have, that your organisation, Futuregrowth, has played quite aptly in this whole situation. I remember back in August 2016, when Andrew Cantor quite vocally said that you guys were no longer going to be lending money into the state-owned enterprises space, and there was huge uproar regarding the whole issue. But that decision really got vindicated throughout this whole process that we've just been seeing playing itself out. Do you think SOEs have had a wake-up call? Do you think this wake-up call is real?
Look, I think that what needs to be remembered by everybody is that we manage people's pension funds, and so we invest, your pension fund and your listeners' pension fund and my pension fund, into assets generated by these entities. And so it is entirely appropriate that appropriate governance questions are asked of these entities. They raise capital from public capital markets, and they open themselves up to the scrutiny of the public capital markets. And so, we believe that governance is a key question, the key question to be asked. A company that's heading in the wrong direction is going to end up in the wrong place. And governance degradation does lead to financial degradation. And so it absolutely is a requirement from an investment point of view to make sure that, the money that we are investing on pensioners' behalf, it is safe for the period of time. The other thing to think about, in the bond market is that, there's quite a long time horizon. It's not like the equity market where there's, rapid price discovery. There's a lot of information. You can buy a share today, you can sell it tomorrow. There's a lot of liquidity. That doesn't really exist in the bond market. And so when you're looking to make an investment in a particular company, be it an SOE or a corporate that might be issuing bonds on the bond market, an investor or us asset managers have to take a much longer term point of view. And so governance becomes important in that environment. And especially so because they hold themselves out, to be separate. They have separate financials, they have a separate board of directors, these SOEs, and so they're not just an arm of government. And I think what has been interesting, certainly, just to observe, is that the capital markets, there's been a difference in terms of access to capital markets for some of the SOEs. And so we're finding that some of the state-owned entities, even those that issue debt with an explicit government guarantee, have been unable to access capital. And I think investors are starting to ask the right questions around, where is this money going and what is it being used for? And sure, if there's a government guarantee, maybe you're going to get the money back at the end of the day, but what is the money being used for? And as a responsible investor, it is absolutely our duty to ensure the efficient allocation of capital.
Well, that was Olga Constantatos. She's the Credit and Equity Process Manager at Futuregrowth. And you're listening